Welcome to our tax and accounting channel. Today we are going to talk about issues related to joint tax returns. Anyone dealing with a marital separation or divorce issue should find this topic to be useful. I'm Gary Massey, a CPA and the owner of a tax and accounting firm focused on the needs of small businesses and small business owners. I help taxpayers to save taxes and to stay out of IRS trouble. So let's start with the basics of jointly filed tax returns. Spouses are allowed to file a joint tax return, and the advantage in doing that is that you enjoy lower tax rates. However, there is a downside, and that with the lower tax rates comes joint and several liabilities. That means that both spouses are jointly liable for the tax, regardless of who earned the money. That means that in case of a collection issue down the road, the IRS can collect the tax from either spouse. If you file a married filing separately return, you do have the option later on to amend your returns and file a joint return. However, it does not work the other way. If you file joint, you cannot amend the return to file separately later on. You are stuck with that status and stuck with the joint liability. Sometimes it happens that divorce agreements will say that one spouse is liable for the tax in the case of a divorce. However, that is not binding on the IRS. One spouse can sue the other spouse, but the IRS does not have to follow that, and they can go after whichever spouse they would like to get the money. What if one spouse wants to argue that there never was a joint tax return? And this can happen in a number of cases. For example, if one spouse wants to avoid the joint liability, or if one spouse forged the other spouse's signature, or if one spouse never saw the return to begin with. So I'm going to give you some examples as to how this plays out in the joint tax return arena. So the first thing that the IRS will do in these cases is look to see if the married couple intended to file a joint tax return. That is the general rule that the IRS follows. So first, let's talk about signatures. So today, most tax returns are electronically filed. So in order to e-file a return, there is a form called an 8879, which is the e-file authorization form. That form needs to be signed by both spouses. In my tax practice, we don't e-file a return unless we have it signed by both spouses. So that's the first thing the IRS is going to look at as evidence of a joint return. Now, what if it's paper filed? If the return was paper filed and then mailed into the IRS? So here too, the return needs to be signed and also dated by both spouses in order to have a joint tax return. So that is your basic situation. However, sometimes you have the situation where the signature is missing or there is a forged signature, and you want to now get into the issue of, well, was there even a joint return to begin with? So I'm going to go through some examples and tell you how the IRS and the courts rule in these type of situations. So the first case is what is known as express consent. That means that even if a signature is missing on the return, if one spouse expressly authorized the other spouse to file the return on their behalf, that will be considered a joint tax return, even if the return is missing or forged or whatever. The other type of consent is known as tacit consent. That is where one spouse agrees to the filing of a joint return without actually saying so. So in these cases of tacit consent, that is also ruled a joint return by the IRS as well as the courts, and there's going to be joint and several liability for the tax, as we have been saying so far. Now, here are some examples of tacit approval that I would like to share with you. Let's say that you have a couple and there is a missing signature or a forged signature, but they filed this way for many years. That is known as tacit approval. The IRS will rule that that is a joint return with joint and several liability. Another case, let's say that they've been doing it this way and the spouse never complained before, but they're only unhappy now because they owe a lot of money in taxes. So that too is called tacit consent, and there's joint liability. If the objecting spouse earned income, then they surely knew that there was a tax return required. So even if they didn't sign it, because they surely knew there would be a tax return, that will be considered tacit approval. Let's say you have a forged signature. So how did that taxpayer think that the return was going to get filed? That will be considered tacit approval, even in the case of a forged signature. signature, or the spouse participated in the preparation of the return, or the objecting spouse had a non-tax reason to file a joint return even without signing it. For example, let's say they're applying for a mortgage and they need a tax return in order to do their mortgage application. So even without the signature, that too is considered tacit approval and brings with it joint tax liability. Now you have another case where the signature on a return was forced, known as signed under duress. That's the "he made me do it" argument. So if you have a true case of duress, that is not a jointly filed tax return, and there will not be joint liability for the tax. However, to prove that duress, the spouse has to go through some pretty difficult tests. They have to show that they were unable to resist the demands to sign the return. They have to be able to prove that, and that they would not have signed the return but for the force of their spouse to do it against their will. That's not an easy test, but if you can pass that test, then you can get out of the joint return joint liability that we've been discussing so far. If you cannot meet any of these rules that we've discussed before, and you can't get out of the joint return category of returns and joint and several liability, then there is still one more option for you, and that is known as innocent spouse relief. I discussed that in a different video, and we'll put a link to that video below. Do listen to that video, and that discusses the case where you do have a joint tax return, and there is joint and several liability, but there are a number of ways under the innocent spouse rules of getting out of it and either reducing or minimizing or sometimes eliminating the tax that you're going to pay. So please check that out. I hope you have found this discussion about jointly filed returns to be interesting as well as useful to your situation. If you have enjoyed it, please give it a thumbs up. We appreciate that. Also, if you can subscribe by clicking on the button, that helps us to get the videos out to you and you won't miss future videos. And let me know what you think about tacit consent and the other matters that we've discussed in this video. Please feel free to leave a comment below. If you need more personalized attention, you are welcome to reach out to me by going to my website, and there's a link there to send me a message. You can send me an email. My email address is also in the comments below, and you're also welcome to call my firm, ask to speak with me personally, and I will do my best to help you in your situation. For now, I wish you all the best, and I look forward to talking with you next time.